What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is January 10th of 2019. Well, folks, I hope y'all are having a fantastic day wherever you are. And today on the update, we've got a few different things to talk about in regards to crypto and traditional markets. For crypto, I not only want to spend some time to talk about the recent sell-off we've seen over the past few hours and kind of making a sense of where we are in regards to price at the moment, but along with that, I'd like to spend some time talking about the debacle that happened a few days ago in regards to Ethereum Classic. And I want to spend some time, not only to share my opinion, but really send a clear message as to what we can learn from this event. Outside of that as well, though, for traditional markets, I don't have any headlines to go through today. I just simply want to spend some time to dive into price action for overall indices in the stock market, as well as where we are right now with gold and silver, which have recently gained a decent amount of traction. So we've got lots of things to discuss. Let's not push it off any longer and dive right into the update. So starting off, let's go ahead and take a look over cryptocurrency markets. As we can see, Bitcoin for the past week has actually remained being relatively flat because the gains that we saw back a few days ago have been wiped out with the recent sell-off over the past few hours with a decline of about 5% from the traded price. And we can see here with Bitcoin going down, most altcoins are in the red at the moment. Now, what is nice is that for the past week here, as we take a look at the 7-day, we do have a lot of well-established altcoins still making highs even after the sell-off. We have Cardano, even though it went down 12% over the past few hours, still up 4% for the week here. You've got NEO in a similar case here, a little bit less than 4%, and even Litecoin and some more well-established cryptocurrencies. Tron still maintaining a lot of momentum with, for example, the BitTorrent token offering that they're doing. I still haven't really understood all the details with it. I think it was an interesting acquisition that they did. I like BitTorrent. I like all these torrenting platforms. It's very in nature with cryptocurrencies being relatively peer-to-peer, but that being realized, again, I think you're starting to see a little bit of risk-taking in this market. And that proves that over the past 7 days, to see some of these altcoins up as much as they are, some of these higher-ranking ones, it starts to show that signal, even though we saw a decline over the past few hours. A pretty sharp decline in most altcoins, in many cases double digits for Ethereum and Cardano and some of these more well-established ones. But anyways, I'm rambling at this point. But I would just say more than anything, it is good to see that we're still holding in this range around 120 to 130 billion. So we can take a look at the past 30 days. And as we can see, we've obviously reached this kind of range here ever since Bitcoin has been holding around the $4,000 range. And it's good to see this. It's good to see that markets are showing a little bit of resilience and confidence, that there is some risk taking at the bottom here with valuations coming down to 1/8 of what they were back in December. It's pretty expected in this case. And as we talked about, and I'll continue to talk about over the next few weeks and months, my major, proposition is that we're going to still see a rally towards the 100-day, which is either going to be at 5,000 specifically or in the upper $4,000 range, which does provide some upside for Bitcoin. But that being realized, I still believe that we're going to see a possible retest of the lows and maybe even see lower levels. So I'm not convinced that we're in like a full swing altcoin cycle just yet. But with volatility jacking up a little bit, and not to mention Bitcoin dominance continuously testing towards this range around 50 to 51%, it is getting me eager at the idea that we could start to see altcoins regain dominance in this market, whereas Bitcoin really over the past year, obviously being in a bear market, has started to regain some of that market dominance in this case, selling off less than altcoins. But with some of the rebounds we've seen in some of these projects, I would say that it's something to keep an eye on. Again, keeping towards the nature that in the next few months we could really start to see something substantial. So again, I'll keep you guys up to date on that with my thoughts. I hope you guys again, think for yourselves on that. I'm just trying to give you guys an idea of where I can gauge where we are at the moment. Now, as we can see here, since back towards late December, we've really been pushing sideways at the moment, getting past some of these key levels of resistance. So for example, we got past the first line here, and along with that as well, we have a line of resistance with the price up here as well that we definitely want to see Bitcoin test up towards. Nonetheless, though, at the moment, we've gotten above the 50-day moving average. This was the next target we were looking at, and luckily, we have been able to get above this. So it's really good to see. I'm excited more than anything, not to mention, even after Bitcoin having this really nice rally off the lows, the RSI has remained relatively flat, obviously, because prices trailed sideways. But this also gives us some advantage in this sense, because if we're at this range, if we're holding here at near a level around 37 to 3,800 and holding on the 50-day, we've not only gotten past some key levels of resistance, but we're not worried about being overbought at the moment. We're mid-range on the RSI. So this gives us some room to where if we can hold here, we can not only reverse today's downside action, but again, test up towards the 100-day. This is the next level we're going to be testing towards if Bitcoin can hold at the 50-day. So I know a lot of people joke sometimes, and I think it's just sometimes I'm not clear enough on this, so I'd like to clarify how, as a trader, I sometimes play both ways. I sometimes have areas where I call the twilight zone, where I don't do anything. I basically just sit here and I wait and I think, okay, so I'm waiting for Bitcoin right now. It's sitting at the upper $3,700 to $3,800 range, and it's holding on this 50-day. I can see here over the past few hours that it's still currently testing here. Now, it looks like it could break down. If this hourly candle breaks lower, this means that we're probably going to go down and retest the lows, that we aren't going to get our upper 4,000 range rally. So that being realized, I'm waiting to see whether or not price is going to break below, or if it's going to hold for the next day or so and potentially start picking up momentum to the upside. If it does hold here for the next 2 or 3 days, I would bet that we're probably going to see this come up, retest the highs, and if we get a close above there, rally all the way up towards the 100-day. But if we close another down day below this, and it's clear that it's not holding the 50-day, then in this case, we're probably going to come back down to either test this line of resistance, which almost lines up again by that time with, if we take a look here, with the previous low that we had around 31 to 3,200. So that's another case scenario as well. And for crypto nowadays, with Bitcoin being at 3,700, we need to sit patiently and wait for these opportunities. If you're going to try and trade these markets in this case, it's best not to try to gamble in this case and say, oh, I'm confident that it's going to rally to 4,000, 800 or 900, or, oh no, it's gone all the way down. Wait until a catalyst shows. Wait for it to be clearly shown on the chart. At least that's my opinion. Again, you guys have to decide for yourself. But I mean, I tell you guys, I wouldn't be panicking or getting too emotional about any of these leaps up and leaps down, because we can see here the BART charts are still alive. It's literally in our face 24/7. And you can see just how little volume pushed this. 3.8 thousand Bitcoin. Not much. Really not much. And it just shows it's because we don't have much volume trading on markets. So again, very important to note that this is just simply rinse and repeat. 3,200 Bitcoin propping up the market, 3,800 Bitcoin bringing it down, and right back down to the range it was beforehand. So again, it's margin traders. They're taking advantage of people trying to overtrade this market. Let's go ahead. We'll take a look at 2 cryptos. We'll take a look at ETH and XRP. Of course, Ethereum taking a decent hit here. Let's go ahead and take a look at the daily more than anything. Rejected at the 100-day. We didn't get the pop above it. I'd wait to see this hold on the 50-day like we were waiting for Bitcoin. This means that I think Ethereum's got a little bit of downside, even though Bitcoin's right now testing that the 50-day range. So I think you're going to see this come down here either way. And if we do break below the 50-day on Bitcoin, this is going to probably collapse back down to the low. So, that would be pretty much a $50 discount off of Ethereum's price, which would be interesting. I'd definitely be keeping an eye on that. If we go back to being a double digit, well, I'll keep my language censored, unlike for example, Arthur Hayes, is the founder of BitMEX, who created a very interesting label for Ethereum. But anyways, again, just very cautious on this in this case. But there might be some demand for ETH if it is still used to do security token raises in this case. All right, so let's go ahead, go back to XRP USD. XRP getting rejected at the 200-day here, obviously following Bitcoin in this case. There's not much crazy TA you really need to do on this. One thing that I am going to be looking for here is that we are seeing rising lows on XRP in this case, right? We set a higher low this time. I would wait to see XRP at 30 cents. This would be a range where I would definitely get a little bit interested, not to mention the RSI will come back down and probably reach towards 30 on the RSI, meaning that it will be close to oversold in the short term. So I'm interested to watch this. You can see we've got lowering highs here, rising lows, could be building up to a wedge. So again, I'll mark that on the chart here. I forgot to mark that the other day. Or maybe I'm on Bitfinex. I usually don't use Bitfinex. So in this case, watch for price to continue wedging in. Maybe this will lead us somewhere into the spring of potentially getting that rally we talked about in altcoins, potentially seeing some risk taking coming in. All right, so enough talk about price action on the market right now. Again, nothing too exciting going on. Still waiting patiently for us to possibly retest the lows before I do anything crazy. But I want to spend some time to talk about something very fundamental. And this is a little tad bit old news. It happened about a few days ago. But I wanted to spend some time talking about this topic and making it very clear, because a lot of people in the cryptocurrency space are holding altcoins that are proof of work based. They're basically transactions are validated through mining in this case, very similar to Bitcoin. And This is a very big issue. I think Ethereum Classic is going to be a topic of discussion because we've had 51% tax beforehand. This has been proven multiple times, but to actually happen to a pretty well-established cryptocurrency like Ethereum Classic, it sends a clear signal that we need to discuss. So what's the important topic here? What happened first? Basically, Ethereum Classic had a variety of double spend attacks on well-known exchanges like Coinbase. We'll even take a look, for example, at an exchange like Gate.io, who had the same case, where a variety of people were basically taking advantage through their Ethereum Classic holdings to double spend, to be able to generate coins out of thin air, send it to exchange, and be able to sell it on market for US dollars or some type of fiat in this case, being able to pretty much cash out. So there is an important problem here. Proof of work itself, in this case, is a very secure system. But if someone's able to get enough hashing power to outweigh the network, then they're able to double spend. They're able to create coins out of thin air in this case, if they're able to outpace the other miners. Now, this is something that's could happen to Bitcoin in this case, but it's important to understand the difference between Bitcoin and Ethereum Classic. It is the distance and the distinctness of the hashing power. The amount that Bitcoin has makes it extremely secure and highly immutable. Whereas on Ethereum Classic, it's something that someone can easily step into. It's a cakewalk. And that's exactly what happened. Someone with enough hashing power was able to do that. And my main point here that I want to drive into is that Ethereum Classic, just like any cryptocurrency that runs on proof of work, the only way a cryptocurrency can really stay secure in a proof of work state of reaching consensus is to guarantee that whatever hashing algorithm you use to reach consensus on your network, in the case of Ethereum Classic, it's ETH hash, you need to be the predominant network that has that available hashing power, right? So in the case of Ethereum Classic, this is not true. And it sets a huge vulnerability. The reason Ethereum Classic was able to be 51% attacked is because it uses the same hashing algorithm as Ethereum. And Ethereum miners who are spending their time mining on the Ethereum network can easily switch over to Ethereum Classic. And if they have enough with how centralized mining is, they're able to commit these 51% attacks. Now, a lot of people would say, for example, and we saw this, for example, with Gate.io, which I have nothing really positive or negative to say about Gate.io. It's just like one of the thousands of cryptocurrency exchanges, that they had a confirmation on a 51% attack and that they're going to refund users for it. But you know what? I'm actually going to hold a very different opinion to this. Whereas a lot of people would say that the exchanges are responsible for this, that they hold the responsibility or bear the responsibility to guarantee that, to verify withdrawals in this case, to make sure that people aren't corrupting these chains. I actually say BS. I disagree with that. As much as I hate a lot of these crypto exchanges, I know they make a lot of mistakes. It is not the fault of the cryptocurrency exchange. It is the fault of the underlying technology. It is the fault of Ethereum Classic's network. Now, I have no disagreements with the moral ramifications of Ethereum Classic. It originates from the fork in the currency between the DAO hack. This was basically where someone had basically violated a smart contract that led to hundreds of millions of dollars in Ethereum being stolen. And because of that, there was a split. There were some people who rolled back the chain, Ethereum, as we know it today, that was led by a small group of people who have very high influence on the Ethereum network. And the Ethereum Classic community believed that, no, we need to split off from this. We do not believe in rolling back the chain. Ethereum should be immutable. It should be irreversible. That's the whole point of blockchain. Well, in this case, this is what led to the fork in the currency. I'm not arguing that position. I absolutely admire that notoriety to the idea of what blockchain's about. But the issue here is that this is why forks don't work in a cryptocurrency community. You can fork software. You can go out there and build different implementations of software, and it works just as fine. But with a cryptocurrency, you are dealing with a financial vehicle of wealth. You're dealing with money, in a sense, and a digital form of a cryptocurrency. And you're dealing with a network that security relies on a sole thing, and that's hashing power. When someone can step in with an equivalent hashing algorithm, using the same hashing algorithm, or maybe, for example, has specifically built miners that are built to run ETH hash, and they can easily step in and corrupt your network, it's not secure. You'd probably be better off with proof of stake. You'd probably be better off with a variety of other systems like delegated proof of stake. It's much safer in that case. So this is my kind of gripe with proof of work. A lot of people complain about the environmental things and a lot of other things. My concern is on a security framework, and that is that unless you can maintain the majority of the hashing power, it's just not worth it. So I'd like to hear from you guys down below. I know it's a controversial topic, and I'm sorry if I got a little opinionated and heated up here, but a lot of people got their money invested in Ethereum Classic. Coinbase listed Ethereum Classic, and they should have thought that this would be possible in this case. But at the same time, I think more than anything, the investors need to know about this. If you're going to be investing in Ethereum Classic and be putting a substantial amount of money, you should understand what secures the network. I think it's everyone bears a little bit of the responsibility here. It's a big reason why I don't buy a lot of lower level proof of work cryptocurrencies outside of short-term speculation, right? So anyways, putting that aside, love to hear what you guys think about that down below. But going into equity markets here, let's go ahead and spend some time to talk about some of the major indices and talk about gold and silver as well. Now, we have seen clearly, I want to make it absolutely abundantly clear, we've seen a nice rally back in the NASDAQ here over the past few weeks. I was watching the Russell 2000, for example, and once we got below this line, this was a line I've had here for a while that goes back towards a longer-term trend in the Russell to the upside. I was thinking that at this point, not only with the RSI revisiting the oversold range, as we saw a rebound back here when it reached that range, I was expecting that we'd probably see a little bit of a short-term rally in equities. That being realized, though, we are entering back into a range on most of the indices, which was remaining as support and is probably going to be turning as resistance here. We've had a nice rally here over the past really few weeks here. If we take a look at the weekly chart, we can see for 3 weeks, we've been seeing prices go up 3%, 3%, and 4% here on a weekly basis. This is really nice to see as a rebound for the Russell 2000. And the same goes for the other indices as well. For example, the Qs here or the NASDAQ, we can see very nice rally over the past few weeks. And again, this comes at a time where we're starting to see some of the FANG stocks come back. Amazon ripping upwards. You can see here having a really nice uptrend back up to this level, seeing if it can test resistance and break above it. I'll be honest, I think it's going to be weighed down here. And as well as other tech stocks as well. Apple making a nice rebound back up to still hanging in the lower range here, but definitely mitigating this gap here, closing the gap here. This tends to happen a lot in equity markets. Most gaps get filled 80 to 90%. So what are we making sense of here in the market? What am I thinking is happening at the moment? I'm still watching the tech indices, but you can look at the S&P 500 and the Dow Jones. I think more than anything, I'd be watching to see if we get above this 50-day, because the 50-day, much like the line of resistance here, weighed down price, right? And it led to a pretty dramatic sell-off, a clear rejection. I'd like to see if today or tomorrow we can get above that 50-day. If we can't, most likely we're going to roll back over and test this line of descending support. That's what I would think would be next. But again, I'm not making any serious moves here. I'm waiting for this to send a clear signal that it's going downward, and then maybe I might play some short plays on equities. But at the moment, there's not a clear trend just yet, right? We were clearly in the short term getting an uptrend, but we've been on the downturn for the most part, and now we're starting to get a little bit of resilience. I kind of wait until the message is clear again that we're going downward. With the Fed, for example, easing in a little bit on interest rate talks. Still kind of indifferent. I have to think about it. There's some pros and cons for the Fed caving into markets at this point. But, with possibly some stock buyback pressure as well, we might be able to see this push in this channel for a while before we get a real dramatic sell-off. So there will be many rebounds and many sell-offs on the way down, guys. But I do believe we're still going to 2019 and 2020 for an extended long period recession of about 40 to 50% decline. And we've already started a decent process from those highs. Again, just to reiterate, my target is somewhere down in this range, down here between 4,500 and 5,000. Really would like to see actually a retest of 4,000, because that would be a 50% correction from the highs here at 8,000. So, I think we'll get that in the tech plays, but maybe some of the other indices will probably get something more like a 40% decline rather than the tech stocks, which really need to pull back. All right, so let's go ahead and talk about gold and silver. This has been something that I've been watching for a while. As you can see, I labeled that we have a potential breakout that is imminent in gold. We've not only had a great short-term uptrend here, but the major thing as to why there's some significance is we're getting closer to a very long-term wedge in gold's price, and we got above the 200-day, which again is a very positive sign. Same goes for silvers. We'll take a look at it just a little bit. But more than anything, we've gone stagnant for the past few days, and I think even though we have a chance to possibly pop up here and see a little bit higher on gold, the thing is I'm waiting patiently on gold because I want to see this come down and test on the 200-day. A really good sign that you're going to get a breakout on a wedge is to wait for price to get into a much more narrow range, which we're getting to in the grand scheme of things. This is a very, very narrow range of price comparative to the wedges movements in the past for gold. But I want to see this come up, hit resistance, and not retest the lows of the wedge, like where there's a line of support. I want to see it hold on the moving averages, the 200-day, the 50-day, the 100-day, which all look like they're coming up to potentially support a slight pullback on gold back to the 1250 range. If you get gold holding that, say in the next month, and it's very clear, then you're probably going to start seeing price action come up and you're going to see a potential breakout. That's the optimal scenario. That's what we want to see in gold. And the same goes here for silver in this case, right? We're having a very similar scenario. 50 and 100-day coming up. We blew past the 200-day right here and found support on it. I'd like to see it come back down and hold that for a while. And I will say, again, I still believe, guys, that silver is the one that I'm really watching here. It's a little overbought at the moment, which is why I want to wait for this to pull back. But the whole thing about it is that, with the gold to silver ratio and a lot of other factors, silver, it has been overdue for a while for, I think a pickup in my opinion. So, I'd like to hear what you guys think about commodities in this case, where you think they are at the moment. But I'm definitely interested to keep an eye on these going into 2019. As I've talked about, commodities and crypto are going to be my major plays. If I make, for my longer term investments in this case, something that I'm going to be holding for a while. So we'll have to see, though. It's a very interesting time, guys. I think, again, they're going to play very similar, come down to this moving averages. We just got to remain patient. But the longer term trend, I think we're going to spot something in 2019. I know so many gold and silver bugs who have been patiently waiting for this moment. Some of them have even folded. But the moment where people feel like giving up and folding, guys, when we're finally starting to see such good technical patterns here on the long term, breaking out of this short term channel that was holding back here since the summer and really having a nice rally, shows that we're ready to potentially see some momentum, testing some of the older levels above $20 to $30, in my opinion, going into 2019. And with markets on edge, it could fuel it. Anyways, that's it for the video, everyone. Thank you all so much for watching. Again, if there's something I missed in the video or something you want to comment on, leave it down below in the comments. I'd love to hear from you guys, a good discussion going. But until the next video, thank you all so much for watching, and I'll see you all in the next one. Stay tuned.